If you've ever filed your own tax return, I can almost guarantee you've paid more tax than you should have. Not because you did anything wrong, but because nobody has ever told you what you can really claim. So in this video, I'm going to tell you the most overlooked claims expenses you've probably missed, if they apply to your specific situation, and what you can do about it if you've already submitted your tax return. And using the things that I talk about in this video took one of my clients from owing money to HMRC to getting almost £3,000 back from them. By the way, this video is also only scratching the surface of what's really available to you. If you sign up to my daily emails, I'll give you 30 ways in 30 days for you to slash your own tax bill completely legally and completely for free. There's a link below for that. So my first question to you is, did you do any work from home this year? Not do you have a home office, but did you ever answer an email from the sofa or pull up a spreadsheet whilst working at your kitchen table? If the answer is yes, then you've definitely left some money behind on your tax return. Most people think you can only claim this expense if you work from home full time or you have a dedicated room in your house that's used as an office. But it doesn't. Anytime you're home and you do any kind of work, then this counts. One of my clients, Dan, runs a small landscaping business. He spends most of his day outside, but does all of his invoicing and admin when he gets home in the evening. He was shocked when he first spoke to me, and I told him he was missing out by not claiming for this, because he assumed it only applied to people who work from home all day. He'd left loads of money on the table because he had 8 years of business where he hadn't claimed for any of this. You can think of it like a dripping tap in your bath. One drip isn't a lot to even notice, but if you leave it dripping for a year, you'll probably end up with a full bath without even noticing it. And that's what you're doing by not claiming any work from home allowance. It might not look like a lot on its own, but it adds up every year you don't claim it. There are actually two ways to work out this claim. Now, you can use a flat rate based on how many hours a month you work from home, which is way easier, but usually results in less money being claimed. Or you can work out the actual proportion of your home running costs, such as heating, electric, and gas. And this method takes more effort, but usually ends up in a bigger claim, meaning more tax is saved. So this is exactly the problem that I want to solve for you in this video. You've got no idea what you're actually allowed to claim because nobody's ever sat you down and told you. So let's get going. Have you ever answered a work email from your phone? Or how about calling one of your clients to arrange when you're going to do some work next? I'm pretty sure most of you have, and if you're not putting some of this as an expense on your return, then unfortunately you've overpaid tax. Just like with the work from home claim, most people assume that it has to be all or nothing. Everyone usually thinks if they don't have a dedicated work phone that they can't claim anything at all. But that's not how it works. If you use your personal phone for any business calls, texts, or emails, you can claim a portion of that bill. Combine that with using your home internet to send the email, and you've got even more expenses to be claimed. Let's say you go into the city for a couple of drinks and you're jumping on the train to get there. Just because you use the train doesn't mean you have to pay for the whole running costs and every seat on there. Although with the state of the train price in the UK, it sometimes does feel like that. But the thing is, you're realistically just paying for your share of using that train for the one journey. And your phone bill works in the same way. You're not claiming the whole bill, you're just claiming your share of the business use. But how do you actually work out that share? Well, a simple way is to look at a typical week and estimate roughly what proportion of your calls, texts, and data are business and what are personal. If you think it's 20%, then you claim 20% of the bill. It doesn't need to be perfectly scientific, it just needs to be reasonable, and you need to be able to explain how you got there if HMRC ever asked. And this is exactly where a lot of people freeze up and just don't put anything on their tax return. They know they can claim for something, but they just don't trust themselves to work it out properly without a professional looking at it. And I completely get why people have that mindset, because the last thing you want to do is end up on the wrong side of HMRC and get yourself a fine. But it's also leaving yourself so much money out of pocket every year and giving more of your hard-earned money to HMRC than what you really need to. But if you are looking for a professional to handle all of this stress for you and make sure you're paying as little tax as you legally can, then head to the link below to book in your free call with me. This next one is the area that had the biggest impact on my client getting £3,000 back from HMRC, just by claiming everything he was entitled to. But the thing is, this is one where most people just completely overlook it and don't even think to put it down as an expense at all. Mainly because they think of expenses like physical things, such as equipment, materials, and tools. They forget that investing in your own knowledge also counts as a business expense as well. If you've ever paid for a course, some training, or even a book that helps you do your job better, these should all be going on your own tax return as an expense. If you bought a new laptop for work, you wouldn't think twice about claiming for it. But a course that makes you better at your job is the same kind of investment, but you're just investing in yourself. There is a catch here though, and this is usually where the question of does this apply to my situation matters the most. Because the rules genuinely do shift depending on what the training is actually for. A course that sharpens a skill you already use in your business is generally more straightforward to claim than one that teaches you something completely new to your trade. It's not that the second one is never claimable, it just depends on your specific situation, which is exactly why guessing on this one is riskier than the others. But missing this one isn't really about not knowing the rule exists, it's a deeper worry sitting underneath all of this and the thought that crosses your mind when you're filling in your tax return of what if I claim it and I've got it wrong? That anxiety is often the real reason people leave money on the table, which we'll come back to. If you're using a card to visit a client, pick up supplies, or travel to meetings, then I can guarantee you're leaving money on the table, even if you're thinking you're claiming for all of this. This is actually the one claim I get asked about more than anything else because it's the one that people are most scared of getting wrong. A client of mine runs a coffee trailer, and although his daily drive to where the trailer is parked up every day isn't claimable, he didn't realize he could claim for the journeys where he picks up supplies. Before he left his old accountant that came across to me, he hadn't put any of this on his tax return. So he'd lost out on hundreds of pounds of overpaid tax. When we worked out it properly with a simple mileage log, it made a huge difference to his tax bill. This is also something that catches landlords out all the time. You won't believe how many landlords come to me and aren't claiming for the journeys where they go round their property for an inspection or to speak to the tenants. It might seem like a small claim, but over the years, this really adds up. Anyway, why would you want to pay more tax than what you need to? That's your money, so you should be trying to keep as much of it as possible. But it's often the fear of HMRC coming after you for getting something wrong, which is the most expensive mistake I see people making. The answer isn't to just claim for everything under the sun, but it's to make sure you're claiming everything properly. There's a real difference between being cautious and just being wrong. Being cautious means keeping a proper log and claiming exactly what you're entitled to. But being wrong means putting your finger in the air and guessing. One method protects you and the other gets you in HMRC's bad books. The good news is this is also one of the easier claims to get right because it doesn't rely on your own judgment the way the phone bill or training courses do. A journey either was for business or it wasn't. So keep a simple log. Date, destination, purpose, miles, and a claim more or less builds itself. This next one didn't really exist a few years ago, but I can guarantee that claiming this on your tax return will save you thousands of pounds over the next few years. This is another super common one that people miss because they feel like background noise. It's a small monthly payment you don't really notice leaving your bank account, and so they don't automatically spring to mind as a business expense when tax time comes around. If you pay for any software or subscriptions to run your business, such as accounting software, design tools, or even things like cloud storage, these are all claimable. And the one that's coming up more and more now is AI subscriptions. That monthly payment you make to Claude or ChatGPT can save you loads of money over the coming years. And like I said, even though they don't feel like a lot every month, add up 12 months of a handful of small subscriptions, and it's definitely not a small amount by the end of the year. It's the same principle as the drip tapping from earlier. This time, it's not in your bathroom, it's in your kitchen. Do be careful though, because the same rules do apply here as the phone bill. If a subscription is used for both business and personal, you can only claim your fair share, not the whole cost. But look, who's going to know if you're using Claude to help you whip up a mean spag bowl in the evening? Probably no one. Something I actually get asked about all the time on this one is, can I claim my Netflix subscription? Well, unless your business is something to do with movie reviews or research, then unfortunately not. You won't find many people getting away with claiming their Netflix subscription. And it's funny because most people aren't confident enough in their tax knowledge to even ask this question. But on the other hand, some people try their luck with everything. But even those people who are super confident and try their luck still want to run it past someone first before they get themselves in trouble. Which brings us to the actual problem underneath everything that I've shown you today. How do you know if any of this applies to your specific situation? Well, not every claim here will apply to every single person watching this video. If you're employed and only do a bit of freelance work on the side, some of these work differently for if you're fully self-employed or running things through a limited company. The point isn't that all five apply to everyone, it's that most people don't even check which ones apply and end up assuming the answer is none, when the real answer is usually at least one or two. And what if you've already filed your tax return? Is it too late? Well, you're not necessarily too late, but you're not in the perfect situation either. HMRC generally allows you to go back and amend a tax return within 1 year. So if you've just realized you've missed out on one of these, it's usually still worth checking whether you're inside that window to change it, rather than assuming the money is simply gone. But if you are outside that window, then at least this is good knowledge for the future and you won't be making the same mistakes again. None of these claims are complicated once you know they exist, but knowing what you can claim only solves one of your problems. How do you actually claim them in the tax return? Well, a lot of people file their own tax return, feel reasonably confident about it, but have no real way of actually checking whether it's right. So if you haven't done your self-assessment yet, or you're not 100% sure you did it right, watch this video next, where I'll walk you through the whole thing step by step.